Well, hello everybody, it's Decentralized Dave with yet another podcast, and I'm here with Curtis. Hello, Curtis.
Hi, David.
We haven't done a podcast for a very long time. The primary reason is that my time schedule changed completely. My personal life changed for better, I must say. That's one reason. And the second reason is that I am back to the news television. The good side of it is that I am able to learn some stuff that I didn't see that clearly before, let's say, and it's geopolitical stuff. And what I already know, I can give you a little hint that there is going to be a roller coaster this year. However, we are doing podcast today, and we will start with the updates like we usually do. So, Curtis, that was our little tradition that you always started with Bitcoin.
17 months from the all-time high, is that right? November to November, and then 16 months from the all-time high, it looks like.
470 days.
Yeah. So it's been quite a long run now. I think last time we talked, it was in December.
Yes.
So it's been a while.
Yes.
A lot has happened. We've recently had the pump up to about 24,000,
yes,
which is quite bullish. Yeah, I mean, I did a video on my channel in January talking about things like some of the classical Bitcoin indicators, like the Puel multiple, Nupal, realized profits, things like that, and they were all at a bottom low, a cycle low. So they were all hitting levels that indicated the bottom of the last three bear markets. I think 8 out of 9 of them, or almost every one of them, did. And I put out a video in January saying that it's indicating we're getting pretty close. All of those have now bounced off that, and of course the price has as well. Does that mean we can't retest back down? No. So markets, S&P, etc., have bounced as well, and that's part of why we've had strength. So yeah, that's where we're at with Bitcoin.
Okay, so maybe follow up with S&P, and then I will do both.
Yeah. So yeah, you can go there.
You brought the chart.
Yeah, just basic chart. So it shows the high at the 4,800. We had a descending, several lower highs. You can see the blue line showing we had 1, 2, 3 lower highs. We had the bottom at 3,550 in October, right?
Mm-hmm.
And then we've broken that downward channel. This is the weekly. And we're sort of pulling back to test that a bit, but we hit almost 4,200. We're testing back down, but a fairly bullish chart here in the short term. We can talk a little bit more about whether we're going to go back to lower lows or if there's a greater crash coming. But that's the latest update that we broke that descending line and we're retesting it now. I
should start with Bitcoin. The last time we had the podcast, we were still like 17K or something.
Yeah.
And yeah, you should tune in that podcast, whoever you are that you're watching, because it was pretty interesting that I even didn't want to believe myself what I was seeing, because I was seeing very beautiful descending wedge, and that descending wedge is breaking upwards, but it's not broken upwards yet completely. It means that it's not confirmed. The breaking down of the breaking upwards of the descending wedge is not yet confirmed, because we have still not broken up that, and it's not. It can be theoretically, it can be just a wick. When we broke that upwards, it can be just a week. By the way, this is 200 weekly average. That's why it hasn't gotten broken. We were testing the 200 weekly average quite dramatically.
Right.
But above the red line that I have just drawn, we could just wick above it. It's true, but more often than not, it's more stable. So we also might make some weekly close above that line, and then it actually should go to at least 28,000. And only then we can say that the descending wedge was really valid and that it got broken up like they always kind of do. And on the contrary, the descending wedges get broken upwards and ascending wedges get broken downwards.
The bottom was 15.5. Are you comfortable to declare that's it for the bottom?
That's too soon to tell.
Too soon to tell.
I will refrain from making that statement. This year is going to be a roller coaster, and that's what I can say. And geopolitically as well, lots of stuff are going to change. Lots of shift as well in the geopolitical scene. So
personally, I would give it about an 80% chance that was the bottom at 15.5. I'm pretty comfortable with that number. For several reasons. But there's always the outlier, the war accelerates or something else. There's always that. And I would agree that could crash stocks and crypto as well. But in January, there was $1.5 billion a day invested into stocks. So there was a massive cash investment, and there's still a lot on the sidelines. And I think the worst is over for stocks in the short term, but we can talk about that a bit later.
Also, what I always check, and I know the audience loves it, it's my favorite leverage indicator, over leveraging kind of.
Yeah.
That was also the reason why I was the only one here. I think we had a podcast with Isabel, and even the viewers, even the comments after the podcast, everybody was like, this has to go to my area of 12K, kind of my area where I had it drawn.
Right.
But because of the huge spike in the shorting, and the short leverage coming in the mid-November, I was saying, actually, I think all the time that I was neglecting that no, this cannot go now down. I was opened in December. In December, I was myself as well, very much unsure and very much doubtful that we might actually go down in December, but November I kind of knew. However, the present time, there was a short squeeze, obviously. Yes, that was a short squeeze. The January was a short squeeze, and people started opening a long leverage on 25th of January. So 25th of January, that's 23K, 24K. So this was the time when people started opening long leverage, and month later we are still the same price. So we haven't moved ever since people started opening long leverage. We haven't moved.
Right.
And that's an interesting thing to notice. However, the leveraging is not, I would not say it's that critically dramatic. We've seen worse. We've seen way worse. We had a similar the last year in August. We also were at 23K, 24K, even 25.
Right.
And there was more leverage opened. I'm talking about this time. Last year's summer. This was more leverage here, okay, over leveraging. So this is not that critical, but people are opening long leverage for a month now. S&P 500. Yeah, your line, also when I put it on weekly, I'm glad that you brought this line up. 3900, it's kind of like a mid-level of the structure from last year, kind of. So 1 year of a structure, 3900 is kind of a mid-level. And that's the mid-level is always very important, and it has reactions from both sides. So when you're going down, it tends to make some kind of there is some kind of a bounce. So
right.
I'm not sure if I want to say anything else to the S&P 500 as of yet, to be honest.
Okay, you can look at DXY gold if you want. Just check
exactly,
gold.
Exactly.
Yeah, DXY, you can see we're at 113 last year. It fell off massively, and we're.
Do you remember that I drew this line? I drew this line like the beginning of the year when we didn't even think we were gonna go that much up, and the line still stayed there when we were retesting it this many times.
Yeah. So US dollar has consolidated at that lower 103, 104, which has been good for stocks, good for crypto, good for risk on. It's eased some of the pressure for emerging markets and non-US dollar debt, or rather US dollar debt. The repayment has gotten a little bit cheaper, which takes some pressure. And then, of course, corporate profits in the US. Now, because the dollar is a bit weaker, the repatriated money is more valuable, right? So if you're bringing dollars in non-US dollars back into US dollars, you're getting an extra bonus to your corporate earnings. So it's a support for corporate earning realized profits. So that's good. On gold, it hasn't broken out yet. It's still teasing the bulls. I think we hit 1925 on gold. If you want to jump to that chart.
Well, gold, yes.
Yeah, it keeps teasing them that we're going to have a breakout to new all-time highs. I don't know.
I would say that this is gonna this is gonna break downwards, but I'm surprised. I was thinking of shorting in this area, but I would have gotten stop loss with this anyway. So
if the thesis is that stocks will get a risk on bid, inflation will continue to fall, and the Fed will stop raising rates. If all of those are true, I'm not saying they are, but if they are all true, gold should get into the 2000s in the short term, just because you will have the US dollar weakness, and you'll also have if you look at, well, I think with Isabel we were looking at gold will what was it? Gold started to break out. I think it was 2011. I can't reference that, so we'll drop that. But basically, yeah, I think we will go into the 2000s in gold if the stock market holds up. So just to preface the next graphs, from mid-year last year, for the last 6 to 9 months, about 70% of traders and investors and experts have said we're going to have a massive recession, that you need to sell your stocks. S&P is going to 3,000. The real estate's going to crash. Jobs are going to crash. And they've been wrong. They've all been wrong so far. That doesn't mean it can't happen tomorrow, but they've been wrong. None of those have happened, and I'll go through some charts. Again, that doesn't mean it's not going to happen, but let's look at corporate earnings. So this is includes January, 2022, the full year. I see corporate profits rising here all the way through, including 2022. Q4 of 2022 was beat expectations. We had about 80% of companies beat the estimates, although the estimates had come down. The analysts said we were going lower. They still beat those. Corporate profits have been reasonable. They have not crashed. If you look at jobs, the next slide.
Yep.
We had a surprise 517,000 new jobs in January in the US. So the prediction was for like 185,000. So they missed. There was a standard deviation of 8, I think. In other words, the analysts missed off to several multiples in their predictions. A huge surprise. So it just shows how wonky the analysts and the predictability of these things are. Unemployment rate went down again to 3.4%. So we're at like a 50-year low for the unemployment rate. Some people will say, well, they play with the statistics, and that's because people are retiring and because of COVID. There's some truth there that some people are permanently leaving the market, the job market, but we're still seeing historically low unemployment rate. We have not seen a spike in job losses. There's been headlines like companies like Twitter and Facebook cutting, but those are not on net. Those are not large numbers. And a lot of those people are getting rehired, it seems. So once again, the narrative is not fitting the idea of this big recession coming. This is US house prices by month. We've had volume of sales fall. So the number of houses selling has fallen drastically, about 40%, but prices have not fallen. So we have not had mortgage defaults or bankruptcies wiping out the consumer on that level like we had in 2008 or 2009. So now sales volume usually comes down before prices fall. So maybe that's going to happen. It just hasn't happened yet. And if we go to inflate the big one, CPI, the inflation.
Mm-hmm.
So this is the latest. It includes January. So you can see that
6.4. Mm-hmm.
yeah. So in June of last year, we hit 9.1%. That was the peak. If you remember, we did a lot of videos on this, some podcasts and chats. Now we've had 1, 2, 3, 4, 5, 6, 7 consecutive months where
Mm-hmm.
headline CPI fell. Now we only went down 0.1% from December to January. And again, the bears are saying, oh, okay, so inflation has stopped falling and it's going to get sticky. And that means the Fed's going to have to raise rates above 5%. That could be true. So the next February report, it's very important that we drop below 6%, I think. If it stops around
Okay.
6, I agree that's bearish because it does suggest that maybe Powell will have to start raising rates again. So watch for that February report. I think we're going to drop below 6. I think we're going to go to like 5.7, 5.8, and that's bullish.
I would agree that the inflation peaked for the next 2 years. The inflation peaked. I would agree with that.
We also had retail sales bounced in January, so very surprising. The U.S. consumer is spending a lot. So retail sales bounced up a lot. So again, none of the data is saying even recession. Forget a deep recession. It's not even seeing recession at all. And all of the bear arguments are about what's going to happen, what's going to happen, what's going to happen. For sure, all of that could happen. It just is not happening yet.
It
So
reminds me, it reminds me, Dr. Barry, when he started shorting the American housing market first in 2007, I think. He almost went bankrupt at that point. He's among the best bears in the world as well, I think. And even he can't hit the timing, so nobody can. And especially with bearishness.
He's been wrong ever since that call. He's been wrong for the last 10 years on many things. But
I'm not following his calls for the past 10 years, but I've been following his calls over the past 2 or 3 years.
Yeah.
And he's been predicting even worse scenario than 2008.
Right.
And he was predicting it whole 2021, and then it didn't happen. And then in 2022, looks like it does. I think he's just a little bit off with his calls again.
Right.
Timing-wise.
So yeah, the bears are saying basically we're going to have stagflation of some sort. In other words, interest rates will keep rising, the Fed will keep rising, and corporate profits will start falling, and we're going to have like a stagflation scenario. Could happen. I don't think the Fed's raising much higher, and I don't think the economy's that bad. What I would watch for is if housing prices started crashing, that would be a trigger, but it's just not happening. I think there's demand. I think there's supply shortages in housing. I think millennials are going to be buying. So what is going to crack it? I mean, what's going to crack the system? I mean, obviously, a worsening of the war in Europe, like the Black Swan reference, right? But that can happen anytime. So it's very hard to bet on that. People that have bet on that have almost always been wrong.
You can follow the Ukrainian manpower, because when that runs dry, that's when you should be looking at. And there is it's drained. More than a half of it is now drained. So
right,
the war has been lasting for a year, but you could be timing it from deriving from this fact.
But if we're going to just look at markets can be very bullish through things like Iraq war, Afghanistan war. There can be a lot of bad things happening in the world. There may be an argument that this is the ultimate bad, like Putin with nuclear weapons may be worse than that. But even, and also the consumer in the US, a lot of people are in Europe are doing very poorly. There's a lot of suffering in the real economy, but that does not mean that asset prices are falling. In fact, often it's the opposite, that you have very bullish risk-on asset prices rising while your average person is suffering from things like recessions or job loss or inflation. So
Well,
yeah,
it's not necessarily, I don't necessarily agree, because we are yet talking about the S&P 500, which is the American index, and the US is heavily involved in the war weapon-wise, and their war industry is now shut on 100%.
but it's a moneymaker. War is the biggest moneymaker in the world, right? So
but only for those countries that just supply the weapons and
yeah,
are not involved. So
yes.
but still,
I'm studying bears right now, so I'm watching all the bears videos, and I'm looking for convincing arguments, and I'm teasing them on Twitter and trying to troll them and get them to give me solid arguments. I know what they're watching for. They're watching for inflation to go higher or be persistent, and the Fed to raise rates above 5%. And I agree, if that happens, we're going to have problems. Otherwise, they're wrong for another year or two, and we're going to have S&P around 4,800. Again, the caveat would be a black swan event, like the war worsening, all that stuff. That's always the case that you have to look at. But I'm watching for housing prices to fall. I'm watching for a spike in unemployment. I'm watching for inflation to not keep going down. And then I'll change my opinion. Until then, I think we had the bottom in S&P at the 3550. And I think we also had the bottom in crypto at 15.5 on Bitcoin. That's where I'm standing.
Is there anything else that I would like to touch? Maybe the Ripple case. The Ripple case is the SEC. We will have wrapped this up after this statement. The Ripple legal battle versus SEC is slowly but surely coming to an end. It cannot last forever. It's been going on for over 2 years, and it has gone through various stages. But I am actually shocked to see that there is no movement in the Ripple price any direction. So because I know that the insiders, that the people are gonna know even before the verdict comes out, people will know, and the price is likely going to react. And it's likely going to only react to the positive verdict, because even if there is this is unlikely that the verdict is going to be negative, that there is at least not going to be a settlement. Positive for XRP is either settlement or obviously the victory. But if it's going to be negative, even if, then I don't think the price is going to go lower or that much lower than it already is, simply because it never recovered after it went down in 2020 when the legal battle started. This is XRP on Bitcoin contract, and as you can see, this was the drop. Once Ripple got kicked from the US exchanges. On the Bitcoin contract, the XRP went down 80% in a span of few weeks, or in 1 month. 80% on Bitcoin contract. That is very dramatic. And that was the beginning of 2020. Then the whole market was growing and Bitcoin was making new all-time highs. And the Ripple has never recovered since that. So it's still kind of depressed. And when it's something depressed, it doesn't react on the bad news dramatically wrongly. However, it reacts on a positive news in a dramatically positive price action.
Right.
So that's why Ripple I'm thinking, or I'm debating, arguing that it could be a win-win scenario, that there is not that much risk and the reward might be huge. However, the price action is now like zero. Like Ripple is one of the least pumping cryptocurrencies this year. Like Ripple has gone nowhere this year. Like Ripple is still lower than it was in September last year or October. So I don't know. Like, the battle, can it last even longer? I don't know. Like the second half of this year.
Are you watching some of the SEC actions that have been coming out this month?
I watched the Kraken.
Yeah.
Kraken attack, and I watched the debate of the staking ban. I don't think it's gonna be effective, the staking ban, at least.
Right.
Whether they are gonna sue exchanges, I'm also not sure.
Well,
but
what's interesting for me is they seem to be going after exchanges, and then lately they're going after stable coins, right? But they're not attacking individual coins, with XRP as the exception, but they're not going after like a Cardano or some other thing saying it's a security. They're telling the exchanges that so they said staking is effectively a security product of some sort, right? And then now they're going after all of the stable coins, right? They're going after, what was it, USDC, and I think obviously the Binance coin they're going after, right? So
USD, yes.
And then if you're thinking, oh, they're doing this to get them out of the way so they can bring in their own government coins, perhaps.
CBDCs.
Right? Yes. But they haven't gone after individual coins. They might not. They might leave. XRP might be the last one, and they say, look, we're going to regulate at the exchange level, and the exchanges are going to decide which coins are valid, which is probably more bullish. It could be that the coins survive or are not attacked directly.
When do you think the XRP battle will conclude?
I have no idea. I haven't been following it, but yeah, you'd think eventually, right? I agree that you may have a good asymmetrical bet here, right? In other words, the downside, there's probably not much downside.
Not that much downside, and a huge upside potential.
Yeah, so you might have, well, at worst case it's flat, and best case it goes up a lot. Yeah,
that's the way I see it. And XRP, even though it's centralized as it is, it has lots of utility, and you should know, because it's all around the Japan is in the primary agenda, seems to be, for XRP.
I know the Japan connection. And then of course, what else was I going to say? Hong Kong just is going to be allowed to have crypto exchanges. So China is saying that Hong Kong can be pro crypto, even though they were banning the miners. So that's from June. Hong Kong may be the new crypto hub in Asia, which is very bullish, because China,
might be a big thing.
Well, Hong Kong is already a major money launderer for Chinese assets, right? So there'll be a massive flood of dollars coming through Hong Kong from mainland China, covertly or overtly. So that's quite bullish news.
Well, hopefully we are gonna do a podcast somewhere around that time, or sooner, of course, but I don't want to give any promises, because my time schedule did change a lot, and Curtis is traveling at the moment as well. But please check Curtis's channel. He's made a new channel, and I've seen some people coming there. I think that you have just 2 videos, but you're already getting at least some views, so I think that's definitely could have wider attention. So
it's called Gresham's Law on YouTube. Yeah, if David can kindly leave a link in there in the comments,
I would have done it automatically.
And I'm doing, I'm probably going to do a crypto update and a macro update once every month or two. So there'll be 2 updates every quarter, something like that. And it'll be about an hour deep dive on crypto market and then macro market every month or two. Try to keep up with it.
So tune him in, and until we see one another again, Curtis, thank you very much for coming.
Yeah, thanks, David. Bye.